Good morning, snipers. I'm back with another education session. Firstly, a brief overview about our community, Sniper Trades. It is a trading education platform dedicated to empowering traders by providing them with detailed insights, strategies, and tools to enhance their trading skills. The core mission of our community is to democratize the trading field by making high quality actionable information accessible to traders at all levels, be it beginners or they are experienced professionals. Through a blend of live trading sessions, comprehensive courses, and one-on-one mentorship, Sniper Trades aims to build a community where traders can learn, share, and grow together, helping them to make more informed and strategic trading decisions in various financial markets. Today, I'm here to talk about key strategies for finding the perfect entry point in trades. In trading, entry points are crucial because they fundamentally shape the risk and potential reward of any trade. Selecting the right moment to enter a trade can significantly affect the outcome in terms of profitability and risk exposure. Here's why entry points are so vital in trading strategies. First is risk management. Proper entry points help traders set effective stop-loss orders. By entering at levels that align with market analysis, traders can minimize potential losses by picking stop-losses close to the entry points and reducing the amount of capital at risk. The second would be profit maximization. An optimal entry point increases the likelihood of achieving a high risk-reward ratio. Entering a trade at a point where the potential for movement in a trader's favor is highest can lead to greater profits while using the same or lower level of risk. The third is market psychology. Entry points are often associated with key psychological levels in the markets, such as support and resistance levels, right? Traders who can identify and act on these levels effectively can capitalize on the market's psychological dynamics and improving their trading outcomes. The last one would be leverage efficiency. For traders who use leverage, especially people like me who trade a lot of options, entering at the right point and at the right time is extremely important. Efficient use of entry points can mean the difference between a profitable leverage strategy and a costly one. Overall, the strategy of selection of entry points is integral to crafting successful trading strategies, enabling traders to manage risk better and enhance the potential for profits in their trading activities. In this video, I'll go over 3 examples that can be used on a repetitive basis for a high success rate in the market. First, I'll go over a reversal pattern where people who are busy with their day-to-day work can focus and make some nice swing trades possible. Second, I'll go over and talk about a breakdown pattern after consolidation and how to trade it on a weekly time frame. Third, I'll go over a consolidation pattern that can be used as a continuation pattern for SPX trading on a 0-day for capturing a major move. I'll also emphasize on knowing and understanding trend lines, support resistance levels, and also going over volume patterns and their importance briefly while we talk about these strategies. Let's jump right into it. I'll be using a tool called On Demand to show you some of the trades I have taken in the past and what I have done, my thought process, and talk about the best entry points for these trades. As our first example, I want to talk about a reversal pattern that we have caught last year on October-November of 2023, where we were watching AMD doing a nice little falling wedge. Falling wedges, as everybody knows it, is a very bullish setup and is a nice reversal pattern too to catch. But nobody really talks about where to enter, where to exit, and what strategy to deploy when you are looking at a falling wedge. When I'm looking at a falling wedge like this, I'm not really looking to enter any positions on the lower trend line or anywhere here. I am basically waiting patiently to look for an entry on the break and close of the trend line. The other very nice strategy that I really picked up over time is a break and close above the trend line, and a retest of this trend line is what is even more important for us to pick up and to ride the wave up higher. And what was the strategy that I deployed here is basically a swing trading strategy 5 months out. Why did I pick up 5 months out strategy here? If you see, the consolidation pattern that has happened in AMD was from June of 2023 all the way until November of 2023. So when did I pick up the contracts, and what did I pick up? What was my target? So if you look into AMD here on November 1st, it started off pretty well, but then like I did not pick up any contracts yet. Going to November 2nd, you see very nice continuation pattern here where you see a nice volume uptick on a price moving higher. Once I understood the volume pattern, that the price was moving higher with increased volume, that was where I was more interested in taking the swing trade into April, which was 5 months out, because the consolidation was also 5 months that took. My target here was basically hitting the all-time highs again, which is at 132. Now fast forwarding to see what happened to the price after our entry, let's go into the end of November, see what happened there. Once the price broke out, there was no stopping AMD at all. As a second example, I want to talk about taking a high risk reward setup on a weekly time frame to potentially generate good returns after a stock has consolidated. Consolidation is not always bullish, and I want to go over an example with a bearish setup here, but this works exactly the same on the opposite side of the break of the trend line for a bullish move. Here is a chart of SMCI that we were looking into recently. On April 8th, we did see a break and close under the trend line here on SMCI, where a target would be hitting 885 next and 820 as our extended target. So we did pick up some 900 puts that we were anticipating to probably double by next day, because we had the break and close of the trend line to target 885. The next day after the market opened, we clearly saw that there was weakness, that SMCI was showing up, and we did see a nice retest of the trend line. I can just fast forward this for you to show you where we did that. And by an hour into the trading session, we did see a nice retest of 885, where our contracts doubled and we sold them for a nice little profit, which was a very nice high risk reward trade where we doubled our position overnight. Finally, I want to talk about everyone's favorite about playing 0-day SPX plays based on flags and continuation at important levels on lower time frames. This was not a trade that I was in, but it definitely helped me not to be on the wrong side of the market. On April 4th, we did see a very nasty and a strong sell-off in the market, and then we had a little bit of a bounce. Everybody was expecting this to be a dead cat bounce and then the market heading back lower. But then what we observed here was a nice little flagging pattern that you can see. Once we saw the bounce at around 5180 level, which was also an important level on SPX, we were flagging. We were not really picking up anything at all. We were basically bull flagging there, and we never had the break and close of the support or resistant level here. And once that broke out, that was where we were looking for a very bullish setup, basically targeting 5200 and then 5230 after, right? So looking at this setup here, if you see what happened at 7:45, we saw the break and close of the candle above 5180. Once the break and close has happened, look at how SPX has started raging back up towards 5200 and potentially to a target of around 5230. Why does this happen is basically when we had that big drawdown in the market, you see how thin the structure here is, right? So once we go back higher, we break that structure. Because of how thin the structure was here, we would definitely see a little bit more of buying pressure, which can push the market back higher much faster. So this was where we basically cut off our put positions that we were in, and we were getting ready to go long. And when we saw the break of 5180, that was when most of our snipers went long, and this was a setup that we were anticipating for a move back to 5230. I hope these examples on setups can help you build a good trading strategy. To effectively master trading strategies, especially those involve precise entry points and timing, like options trading, it's highly advisable to practice in a low risk environment first. Try doing simulated trading environments, take small positions, gradually increase position sizing. Don't expect to just jump into options trading and make a lot of money. You can always join Sniper Trades community to get exclusive insights, valuable resources, and supportive networking opportunities. Whether you're a beginner or an experienced trader, our community is designed to help you sharpen your skills and achieve your trading goals. Don't miss out, become part of our trading network now. Also remember to hit that like button, subscribe for more content, and leave a comment below with any questions or topics you would like to see me talk about in the future. Your feedback is invaluable.